Welcome to the market review at Wealthy Bucket. This is the last premium video we have for the week, going into the last trading day on the Friday. Before we begin, Wealthy Bucket does not provide investment advice. Please consult a financial professional before engaging the markets on your own. Trading and investing in stocks, options, futures, and currency carry risks that can result in a financial loss. So today we're going to start off with looking at some of the money flow ideas that we had going or carrying over, and some active ideas that you had received, so we can review them and determine where we stand on a week-to-week or day-to-day basis. Let's start off with MET. MET, after hitting our fourth target, that trade is effectively done until we find a market pivot. XLB made up a lot of its loss from last Friday. However, it's still not moving. We expected a bigger move. It is still in the red. As you can see, it's still consolidating in that area here, and it really hasn't moved anywhere, and we're taking a bit of a loss on that one. XLE, which is a short energy stock idea. You can see here that it's traded into our first target. If you did take the idea, we suggest that you hang on to it. If you want, you can sell out a bit of your position. It's okay. It's hit our first target right now. However, we would like to see it trade down into the second target, and depending on how the markets will play out, which we'll talk about later on in this video, we can continue to carry this position further. And if we continue to carry it further, we expect it to make back or make our month, so to speak. It's very, very profitable at this time. The Japanese yen idea, which was a short yen, hasn't done much. Currently is trading in the negative. However, because yen hasn't moved lower this week, we're seeing pressure in equity markets. If yen does trade above this level here, we're going to have further pressure on the equity market. So watch out for that. We'll talk about that later on in this video. We got stopped out in our XLK. We were in the stock on this one. We got stopped out, as you can see that today, for maximum loss. We talked about this idea on our Tuesday video, how it's null right now because the major indices closed below their respective immediate support levels. The Russell has traded down. We talked about this in our Tuesday video, that this point here, 1070 or 1107, excuse me, would be your first target, 1107.1, and it's traded into that level right now. And this is because this level has yet to be really tested. This here has caused this run up. Problem is, we talked about how we expect a breakout because you can see the trend. The trend was broken here. The symmetrical triangle was broken here this week, so we expected a breakdown, and we got that breakdown this week. Our AT&T idea, we got out of that one as well. As you can see, it didn't move beyond our first target. American Express, we're very close to taking maximum loss. This is an example of a profitable trade turning into a losing trade, and some of you listening or watching this video may say, well, you would have done this, or why didn't you take the profit? Because these are stock positions. Our expectations were that the market was going to run further. We wanted to let this breathe as much as we could. However, we did have other opportunities going on that did make target. And not all ideas are going to make your profit. If that was the case, then trading would be a lot easier, and you probably wouldn't be watching this video right now. And however, you gotta let some stocks breathe, and right now it looks like we will take maximum loss on American Express. Capital One did trade into our third target, so we're happy about that. And Fifth Third Fifth Third, we took it out at the second target after rallying up. We just decided to get rid of that for now. So that trade is done. The trade that we're looking at right now going into the last day is right now it's here, which is the NASDAQ futures. And we talked about in our Bucket Weekly that if immediate support does not hold, then we're going to default to intermediate. And the NASDAQ has traded into intermediate support right now. The low of Thursday was 3998.25. Our levels at 3998.50. So we're going to watch this carefully and see if we're going to take this trade. That will depend on how the market plays out on the last day. But let's talk about what we should look for on the last day now. So let's take a look at the markets. And as we finish reviewing the MoneyFlow trading and investing ideas, we can take a look at the markets and where we stand based on our Bucket Weekly market forecast that we had sent out on Sunday. And as you know, or maybe you've done this before, we're pretty much gauged week to week or month to month, right? You're only as good as your last trade, or you're only as good as your last forecast, and you're only as good as your last monthly performance. And we're a company that doesn't mind acknowledging when we're wrong, and we're definitely not going to shy away from when we are accurate. And you can see that once this level broke down, okay, this is Thursday, Wednesday, Tuesday, Monday, Sunday. We only have, going into the new week, this information here on Sunday, or from the last Friday, so to speak. And you can subscribe to commentary, you can subscribe to CNBC or CNN or whatever it is. They're just giving you commentary. They're not telling you, if this happens, then then do this. If this happens, then do this. No one wants to, there's other people out there, I'm not saying that. There's very few people that are going to put their reputation on the line and say, if the market does this, then it's going to do this. Everyone's going to tell you, well, the stocks are up today. Great. Oh, and then tomorrow all the stocks are down because of this. As a trader or investor, that information or that commentary is absolutely useless. It's absolutely useless. Tell me what the market's going to do based on a number of factors. And what we've done here is identify levels. And the levels are used simply for a purpose of timing the markets. If this level here, which we considered immediate support based on Friday or Sunday, then we expect the markets to trade down to, let's say, the S&P 500 down to 1954, 1966. And today it closed at 1965.99. It's closing into our intermediate support level. Now, if this intermediate support level doesn't hold, meaning the S&P doesn't stop, pause, and turn around, then this is the next level. 1927.29 to 1941.65. And from here, if the market doesn't turn around and reverse, then there's going to be another level. But these, and you might be saying, well, what good are these levels? Well, these levels are designed so that you can, as long as they hold, that's where you start buying. You don't want to just start buying because it's cheap. You want to time the market. Or if you don't, you don't. However, the point of Wealthy Bucket is to understand what's affecting the markets, and then two, time your entry so that you can obtain the lowest possible risk entry for an expected return. And if that interests you, keep listening or keep reading. So the S&P 500 did trade into our intermediate support levels, and that was based on the notion that the Japanese yen would continue to move higher. And you can see it has not moved higher. It's basically been flat all week. If the yen continues to move higher, then we're going to see more downward pressure in equities. What we were looking for is, if the yen trades below this, which we have a trade going on, or it's pending, and you saw that earlier on in this video, if the yen moves downward, then we know that we can continue to hold our stock positions or our long stock positions. And based on our video, there's a lot of them that we got out of because the yen isn't moving down fast enough. And if it's not, the risk starts to increase. And maybe you're saying, well, I would have hung on because it's basing and it could drop further. Yeah, I mean, that's hindsight. Okay, sometimes you just got to take money off the table and let it be because the market has been dropping pretty fast. Once the market breaks certain levels, we expect it to move to the next level. That's why we don't trade off of conventional support and resistance. We're looking for areas where we can give the market enough time or enough flexibility to breathe, stop, pause, think about it, and then turn around. And if it doesn't turn around, we don't buy more stock, we don't enter into new positions, and we learn to use patience for the next level. If it holds, if the market stops, pauses, and turns around, then we got this timed out. But this is the point of understanding how to enter and exit out of your positions. Now you can see the yen is hanging around. If the yen does move higher, then there's going to be considerable downside risk in equities. The Dow closed below its immediate support level, and based on that, we expect the Dow to trade down to 661.91 to 781.27 because it closed below its immediate support level. And the Nasdaq closed below its immediate support level and it's traded down into intermediate. And if it closes below intermediate, we expect the Nasdaq to trade down into 43.70 to 44.10. Plain and simple. And we'll wait for the market to come down into this level and before we start buying. Just because stocks are cheap doesn't mean it won't get cheaper. And you may be thinking, well, I'm just going to buy because I know it'll go back up. Yeah, sure, it will go back up. But what is your risk? What if the market, if you bought today and it rebounds back up to this level here and then comes back down here? Your risk to reward is crap. And you're not timing it. You're just trying to buy what you perceive as cheap stock. And unfortunately, our individual perception is one thing of cheap. However, the market is the only thing that's going to be right, and it will determine if we make money or not. And that's why we use these levels. And our forecast from Sunday has been absolutely accurate for our premium members. And if the yen continues to move higher or doesn't move lower, if the Nasdaq breaks or closes below 44.62 to 44.85, then we expect the Nasdaq to trade down into this level. Now, earlier on in our video, we talked about how we had identified a symmetrical pattern, and you can see here that the symmetrical pattern has been broken. And in our Tuesday video, we started pegging this level here as our next support level. And you might not have access to it because you're not a premium member. That's okay. And this is the level that we had identified. Now, if this level doesn't hold, this is where you need to pay attention. We're not saying that the Russell is going to drop in a straight line. We expect it to retrace. And we're going to revise those levels for our members on the weekend. We expect it to retrace. However, because nothing goes down in a straight line. If this level doesn't hold, you heard it here first. Okay, this level here has been tested 1, 2, 3 times. Here's your 1, 2, 3. It started here. This level here has been tested 1, 2 times. This origination. So all that's left here is down here. And if that's the case, if you are long stock, a lot of your profits that you had are going to be gone. And if you don't understand how to hedge your account or you didn't take short positions to protect that, a lot of your profits will evaporate. And this is why we look at the markets on a week to week. We forecast week to week for our premium members so they understand what is going to drive the market so that they can protect the money that they've actually earned. We hope you have a great week, and we thank you for stopping by the Wealthy Bucket. If you have any questions, shoot us an email at service@wealthybucket.com.